So if you compare, since you talked about China, right? China is like years ahead of India, of course. But even if you look at specific industries, like the auto industry, for example, India is doing a lot. We have the Mahindra, Tatas, we have amazing products from them. We still can't compete with a BYD in China.
Look, what happened, the best gift that happened to China was in 2014, they were told America is going to tell you to buzz off and we won't sell you anything. And that fear truly forced them to become Atmanirbhar. But that country went in mission mode that let's go and crack this. And what are the industries of the future I have to leapfrog? Like what he's teaching is robotics and AI over here. They are the leaders of robotics and AI. It's not Tesla, it's China.
Yeah.
In biotech, it's not the Americans with FDA dragging them back. It's the Chinese and the Koreans who are ahead in biotech. AI, you saw how quickly that deep learn or deep seek, whatever came out as soon as they released in the US. So EV, they realized that we can't keep importing petroleum. So if I have to solve for this, how do I solve for it? Let me go control the minerals to make lithium batteries. And then they'll go to the next stage of sodium or whatever. They're the leaders in the world. They'll be 50% of the world auto industry. Now, if auto defense are the heart of technology, so the relationship between universities, military and auto has to be very strong. This was the basis of DARPA, General Motors and all the MITs and all of the US, that when the Second World War happened, they went from making 60 planes a year to maybe 60,000 planes a year. And it was General Motors and Ford and all these guys who started making planes. That technology enablement is a mindset issue, which is government, universities and industry have to come together. Like we did it with, when you say iSpirit, like how did they create the India stack with UPI and Aadhaar? So it's doable. It's not that we can't do it. It needs a direction, a vision and a willingness to do it. And it will happen.
So we are in this stage of at least the stock markets or equity markets where this is the largest like FPI selling we've seen in a very long time, right? Foreigners are selling India. And the only reason why our market is holding up is because of the domestic flows and the SIPs, etc. But why are we at this stage where is it just an emerging market churn that's happening? Or do you think that we could be in this protracted period of, like a time-wise correction where there's just not too much foreign money coming in and it's just local money that holds up the market?
Yeah. So to be fair, I'm very happy it's Indians who are finally owning Indian assets. But I'm not happy that we are buying them as if the price has no meaning. And occasionally you will end up buying even the greatest company at the wrong price and you'll never compound. And we've spoken in the past, I gave you the most famous example. The best company in India back in my day was Infosys. But it peaked at a market cap of 45 billion US in 2001. It's today probably 80 billion, 25 years later. So it's not compounded, it's done well. And in rupee terms, it optically looks a lot better. But because the market had taken it to a wrong price, you didn't really compound your wealth from there because the market itself went from 6,000 to whatever, 15 times up from there. And it's not like our best company did it. So just buying the best thing at any price is not going to make you a return. Same way if you're buying like what they call the used cigar butt, which is going to slowly decline and die, that's not going to make you money as well. And the stock market is really a mergers and acquisitions market. Like I've been trained to buy, I may be buying 1% of a company, but would I buy this whole company at this price? And if you think like that as an owner, that is the essence of investing. Today, it's become an asset allocation, right? Because the brokers and the wealth managers are out to get your money.
Correct.
Because they tell you put your money in fixed income and you get 5% in the bank. You're going to be like, "Arey, post-tax, kuch nahi bachta hai. I don't want to put it here." So he's going to take your assets and put it to equity. And by grace of God, last 3-4 years have been so good that you think 12-15% to aa hi jayega. Right? Even I'm telling you very freely, double in 5 years, 4 times in 10 years, so index hi ho jayega. But it may not happen because we've taken that excess return of the future and pulled it to today. And therefore, my best hope is we go sideways, let the earnings catch up, and then we climb up. Because the nature of business is to make more and more money every year. That's a grant.
Correct.
That there's no point holding cash because cash of 100 will be cash forever. But if I buy a company with that 100 and that company makes a profit of 10, then it'll make 12, then it'll make 14, then it'll make 18. And that magic of compounding takes you to a number which is very large. But if you've paid 200 for that 10 rupees of earnings today, then you've given away 5 years of future already. Mm-hmm. So then today, if you're buying things, you better have a longer time horizon. Today, everyone is a long-term investor. Like Mark Faber very famously used to say, at the beginning of a cycle, the entrepreneur has the vision and the investor has the money. And by the end of the cycle, the entrepreneur has taken the money and the investor is left with the vision. So a bit of that seems to be going on right now.
So, but in this AI world, the problem also one is facing is you don't know which company. It's like, A, it's a winner takes all situation in most sectors. And B, it's like, you never know whether the company of today will even be relevant 5 years later. Earlier, it was whether it would be relevant 15 years later. Now it's 5 years later. So how do you pick and choose? What are
So
the
you don't have to
themes?
pick everything. So where you know there's uncertainty, you don't need to go there. And if you're going there, then like you say, you buy the whole basket. And then as the winner starts emerging, you start concentrating on the two winners. Like take a typical case like pharma is not a business which people knew which molecule is going to work and come out. So typically no one has come out in the world saying they're a fantastic pharmaceuticals investor, right? I've not ever heard of even Warren Buffett buying pharma healthcare stocks.
Yeah.
He'll buy United Health, which is a services provider, but I've not heard him saying he's holding J&J or Pfizer or something like that. We don't know what will come out. So in tech businesses, you tend to buy the whole basket, and then you may narrow it down to those who are emerging as leaders. The same thing will apply to new tech. Like today, it's obvious that there's a BYD and a Xiaomi coming out as a leader, but there were hundreds of Chinese who were aiming for the same thing. If you bought all of them and you happen to have Xiaomi and BYD, then the return of the two compensates for the loss of the 98. So that's like venture capital style investing, that you buy the whole basket. That's not what we guys will do, because we want to be first, like as Buffett says, rule number 1, don't lose money. So I can't imagine losing on 98 to make on 2. For us, when we find a sure thing, I want position sizing, because I found something good, I better buy 10% in that. Because that 10% is something which will multiply and make me my wealth.
So when you say something good, what are your markers? Like, do you have a mental
I've
model?
given, when I was growing up, Nimish Bhai gave me a great marker. He says, can you imagine this company earning what its market cap is today? It may take 10 years, but can you even imagine? If you can't imagine, what are you doing? The marker I've given my son is, can you imagine this company in 5 years? And at the price you're buying, can it be a 5 PE stock? Right? Because anything good you'll buy will be at some point, it should be 15 to 25 multiple. Nothing lasts beyond that for very long periods of time. So if he's bought something decent and he thinks the earnings could be in that range, that means worst case in 5 years, he'll make 3x. Hopefully he'll make 5x, which is a proper 24 to 40% type of compounding. Otherwise, you don't need to act. And I've lived through 35 years of market cycle. Market cleans out every 10 years. It gives you stocks, you'll be shocked at the prices at which you get. And then you'll be wondering, arey, mere paas cash nahi hai. I can't sell this because now it's fallen 60%. How do I stitch it here? There's no harm sometimes. Like I said, if everything I'm saying is a cycle, this market is not going to the moon, straight shot. Even when our rocket goes to the moon, it slingshots and comes back. So, shanti rakho. You will get stuff.